Hey everybody, Mark Stiles of Stiles Law down here at Studio B with another question from one of our clients. Mark, what is the difference between a mortgage contingency and a mortgage commitment? That's a great question, and one that a lot of us real estate professionals ignore because we're in it every day. A mortgage commitment is the contract between your lender and you that the lender has agreed to lend you the money. So they have committed to lending you the money. Okay, that's a commitment. It's usually in writing. Now, a mortgage contingency is a provision in your purchase and sale agreement and most often in the offer that you make to purchase the property that allows you a certain amount of time to get with your financier, your lender, your bank to obtain financing, right? So to be granted the right, to be approved for that financing, because it doesn't happen overnight, right? So when you submit your offer and you tell the seller, I need to get financing, I need to obtain financing and grant a mortgage, I need this amount of time. The seller will then accept that amount of time as part of the agreement, and you, as the buyer, will have that much time to get with your lender, get them all the documents that they need in order for them to be able to issue the written approval. Now, typically, they've done a lot of work up front. When you're dealing with a reputable lender, they've done a lot of work up front to have a pretty good understanding of who you are and your credit worthiness. But you're going to submit a lot of information to them. That information may create the need for more information. So what can you do? First things first, never ever lie to your loan officer, right? Your loan officer is like your doctor. You're not going to lie to your doctor. So don't lie to your loan officer because it will be found out. And unfortunately, oftentimes it's found out very near the end of the transaction. And at that point, the transaction could get derailed. So first, never lie to your loan officer and get them everything they need in a really quick and efficient manner. So what do I mean by that? They're going to ask you for certain documentation. The faster that you get them that documentation, the faster they can review it and hopefully approve it. Otherwise, they can review it and find out what else they need, right? Sometimes it'll feel like they're asking for multiple things twice. Well, that's not necessarily true. They're asking for multiple things because of what they've seen in the documents you've given them. Or sometimes they'll ask for the bank statement to be updated to see that certain funds have transferred properly, cleared properly, or that nothing suspicious has happened from the point they looked at until now. The key takeaway, don't lie to your loan officer and get them what they need as fast as they can so that you can meet that date. Because if you haven't done what you're supposed to do and that the loan is delayed and that the buyer's attorney has to then ask for an extension, that makes everybody nervous. It makes the seller really nervous that you might not be creditworthy and they've already expended 3 weeks into the transaction and now they're not sure it's going to happen. So they become very nervous and anxious. We try to eliminate that as best we can. So treat it like a second job. Don't lie to your loan officer, but most importantly, get everything to them as quickly as you can and respond to them as quickly as you can. And they will get the loan approved in a really expedited manner, which will keep the transaction really smooth and stress-free. I hope you found this helpful. If you did, please share it with everyone and anyone. And please subscribe to our YouTube channel where this video is, along with many others. Thank you and be well.